sources, and that's a CNBC TV18 exclusive. And the stock is moving up even more now, 4.5% up on Bosch. Thank you for joining in. Mithun Aswath, Managing Partner, Kivah Advisors, is now with us. Mithun, first, would you have any thoughts on Bosch and this potential corporate restructuring, and come in on the broader auto ancillary space? Any stocks in your portfolio?
Yeah, thanks, Rima. I think on this transaction, one needs to understand what is the valuation that Bosch will ascribe to these unlisted entities. Obviously, the potential is large, but like your colleague mentioned, they may not be that profitable. So we need to understand what kind of valuation will be ascribed to these companies when they are merged. But definitely a positive sign from a multinational company that they want to actually merge unlisted companies into the listed entity, because earlier times we've seen actually MNCs trying to go more private and run their businesses in private companies. So this is definitely a good sign.
Okay, interesting. All kinds of things happening with these large MNCs, big focus on India, whether it's Bosch, whether it's the other listed peer, Siemens, so much of reorganization going on. And this one, I mean, the shareholders will be happy to know that some of the value-accretive unlisted businesses now come within the listed fold. Mithun, hi, great to have you on. So I just kind of, went on a tangent with that important news break. But let me sort of pull back a little bit and get your sense overall on the space. We're talking about capital goods. I mean, it was the market's darling for a long, long time. Then defense kind of, came and took over. But how do you look at these companies when ABS is just one small part? But otherwise, how do you look at the capital goods play?
I think, if you see the auto components or the manufacturing side, the opportunity is very large. In certain segments, it's actually, you're talking about substitution, right? It's import substitution. So we're not really looking at, even if the Indian market doesn't grow that much, the opportunity for that substitution itself is quite large. You've seen that on the EMS side. We are seeing it now even on the auto component side. Another space where, there's tremendous focus from the government is on the power sector. And we've seen the kind of growth that the T&D space is witnessing. And there are very few companies listed focused on each of them. And I think these spaces provide good headroom for growth over the next 2 to 3 years.
Okay, got that. Any tactical trades in IT ahead of the earnings season, Mithun?
I think, Rima, obviously, most people are kind of cautious and the expectations are not too high. So I think, and IT is kind of underperformed. So I think we could see some bounce in some of these, even in the large cap names, which are kind of at the lower end of the valuation spectrum, especially considering, I think, even in the US, there could potentially be rate cuts going ahead. So I think there could be some bounce. But in terms of actual numbers, I don't think they're going to be kind of flattish, I think, even in this quarter. Most of these companies are talking about single-digit sort of revenue growth for FY26. I think it's the mid-cap IT companies where the growth is higher. And obviously, valuations also are higher there. But I think that's where the growth is expected.
Okay. Mithun, what about overall markets? Happy to deploy additional money? Or waiting by for corrections? Corrections are not really coming. The market's not running away also, but it's not correcting also. It's been fairly steady. So how are you going about it in terms of deployment now?
Yeah, I think, Surabhi, I think the market is looking at spaces where there's value or where there's very high growth. I think there are numerous opportunities which are coming by in the recent past through a lot of these M&A special situations. So that is a space that we are constantly monitoring. A number of companies have got demerged, so they have fresh listings and potentially can provide good upside. And there are some companies which still to be demerged, even on the MNC side, as we speak. So that's, I think, a space where one needs to really monitor, and bottom-up opportunities will definitely be there in that space.
Okay. The one area that has been sort of something which has always stirred up a debate in the market is defense, Mithun. The stocks kind of look at it. I mean, again, today you have an announcement, more acquisitions by the government, and the stocks are again flaring up. What's your sense? Have you taken exposure? What would the approach be now?
Yeah, so I think we've been quite positive on that space. We have taken exposures and continue to hold them. They're volatile. But again, this sort of comes to that import substitution. The government is also growing the expenditure on defense, plus import substitution is happening across the space. So, I think the opportunity for the private defense companies is going to be very large. It's the public sector companies where, most of the orders do flow in, but they are getting a lot of work done through a lot of ancillaries and private defense companies also. So there are some larger ones where, like a Bharat Forge or someone where, maybe it's not really representing in the stock prices or the market cap right now, because obviously the auto space internationally is not doing that well. It gets kind of masked. But I think, opportunities like those over the next 2-3 years will be, I think, will provide handsome upsides for investors.
So the stocks which you hold in your portfolio in defense would be?
We have, exposures to Bharat Forge. We also have BEL and HAL in, older clients, and we also have BEML.
Okay, so fair amount of defense exposure. Quick, what trend? Was it ever a part of your portfolio?
Yeah, I think for all our historical clients, we do own it. In the recent past, over the last 6 to 9 months, we've not added for fresh clients. But I think, days like these, when a company which can compound at 20-25% over the next several years definitely presents an opportunity. I think one statement at an AGM should not really be read into so seriously. But I think, this will present an opportunity for long-term investors.
And finally, before we let you go, Mithun, capital market stocks. Again, I have to ask you, same thing, always a big debate in the market. What sense do you get? I mean, I don't know whether this Jane Street episode is going to have any lasting impact or not. But in general, positive, negative, neutral?
Honestly, this is one space that we kind of missed, I think, a couple of times. Even in the Jan to March correction, they, I think, all fell 30-40%, then bounced again. But I think what's happening here after this Jane Street issue, there could be changes in terms of regulation, in terms of how many expiries you have. Do you have weekly expiries at all on the Nifty? We don't know what SEBI is going to do. So that is something, because obviously earlier we never used to have that. We used to have monthly expiries. So if they want to actually curtail speculative activities, I think that's what the market reaction is. But I think the wealth management sort of distribution-led companies, I think those are more of a secular trend because of financialization. I think that's a space which I think if there are corrections, one needs to definitely revisit and relook.
Okay, thank you very much for that. Get into a break. We'll come back and get a check on what dealing rooms are saying in our segment D Street Chatter. Nimesh will join in.